Recipes for technical trading success in Cook's Kitchen.
What would you rather talk about, the AI arms race or the bear market in your tech stocks and your Chinese stocks? Well, today we're going to talk about both of them. Let's quickly look at 4 charts that show us the depressing nature of our Chinese tech stocks. We'll start off with the Shanghai Composite. This is a weekly chart going back to, it's a 3-year chart, middle of late 2015. And you can see the Shanghai Composite is just, falling off a cliff, never made new highs, back to almost to the 2016 lows. The Hang Seng has done a little better, some of the offshore Chinese companies, and but still, it's been hard to make money there. Now, some of my favorite ones, Alibaba. We just sold a position we had for long-term gains of over 80%. We owned the stock from 105, sold some at 190, but just struggling through this chop, and I'm going to show you this incredible business, the Amazon of China, and why you must prepare to buy it soon before they report earnings on August 23rd. My next Chinese stock that I love to trade, but it's hard to own and hard to trade, is Baidu. This is the Google of China. Obviously, they own 90% of the internet search market, but they're also into advanced technologies, artificial intelligence, just like Google. And this one is just cratered after earnings too, back down to 220. So these are hard to trade, hard to own, in addition to the chip stocks. And it's not just about the escalation of trade battles. It's the Chinese economy possibly slowing and trouble possibly brewing in their so-called shadow banking economy. There's been a couple of recent stories where a peer-to-peer lending platform collapsed, and there was going to be some protests in the streets about it because people wanted the government to take some action and make them whole, and the government shut down the protests. So that may be a first crack in the Great Wall of Chinese consumer finance, and it could impact these companies. But we're going to go big picture, and we're going to look at the Amazon of China, Alibaba, and then we're going to talk about artificial intelligence and the big picture of investing in China and why you shouldn't be afraid to invest in China for the long term. All right, so first up, I love this slide. This is a couple years old now, but there's a Baba for that. Look at all the different stuff that Alibaba does in e-commerce, obviously, payments, cloud services, navigation, streaming video, and their market share of online digital advertising has grown to take share away from Baidu, which used to be the heavy player there. What you don't see here is Alibaba's new venture into the grocery business, and we're going to take a look at that. First, let's look at Alibaba's revenue growth. It's just a moonshot here, and it continues to astonish investors and analysts. Although analysts got a little bit ahead of themselves and had to dial things back, but just rough picture, you're looking at still over 50% revenue growth. We are in their fiscal year 19 right now. It started in April. And look what the company's going to do. Going to go from under 40 billion to over 60 billion. I had shown a graphic about 2 weeks ago with really high expectations for possibly 60% growth to over 61 billion, but that got dialed back. So here are the fresh projections. Sales estimates on top, earnings below. I circled a green ellipse for the current year, 58% growth to nearly 61 billion. That was almost 62 billion a couple weeks ago. So that's why the stock became a Zacks number 4 rank. Earnings estimates also came down. Down at the bottom, you see the current year, only 21% growth. This was like 23% growth 2 weeks ago. So that got dialed back. That's why the stock became a rank 4 as earning estimates come down. But I want to point out next year's earning estimates. So, this is, this is a year out, 18 months out, still 30% growth. Now, why do the analysts think, why are they so confident that Alibaba is going to ramp this kind of profit? Well, I mean, look at the top line too. They're projecting 37% growth to over 83 billion in that year. Okay, why would they do that? Well, they're copying the model of Amazon, and the analysts are, they're working this stuff into their models. If Baba does this in this business segment, whether it's cloud or retail, grocery, and I'm going to show you grocery in a moment, then this is what's possible in terms of revenue. And remember how the story with Amazon for 10 years was, hey, look at tremendous revenue growth, but where are the profits? Where's the bottom line? Where are the earnings? And Amazon realized that they could turn that dial whenever they wanted to and monetize so many different areas that they were in, and that's what they've begun to do. So that's why you saw a big earnings beat from Amazon, because they just learned how to turn that lever, whether it was in the cloud or other areas, and turn the profits on. All right, so let's talk about grocery. I showed this slide before. This comes from Stifel. This is all about Hema, which is their upscale grocery store that has a completely sort of digitized online, holding your phone in your hand shopping experience. Then they also have the grocery delivery. They just partnered with Starbucks. So these estimates are old, and just to do a conversion, since this is all in the yuan, 456 billion yuan. If we do the conversion, it's like let's just use 6.5 renminbi to the dollar. This would be equivalent to like $70 billion. So and this is low. This is before Baba reported their fourth quarter and said, hey, we're probably going to do 60% revenue growth. So these numbers are low, but this is how they're able to turn the leverage with the grocery business and capture more consumers. All right, I did a special report this week for Zacks Confidential on artificial intelligence. And I highlighted, where is all this growth coming from? When you look at why do companies want to invest so much in the data centers? I mean, the data center business is, let's say it's 50 to 80 billion this year. That's going to triple in the next 4 years. You're going to be talking about a $300 billion cloud data center sector, so to speak, in about 4 years. All right, so this was, I titled my Zacks Confidential, Artificial Intelligence, Investing in Life 3.0. Life 3.0, where does that come from? It comes from this book by MIT physicist Max Tegmark. So he talks about Life 3.0 as, basically the singularity, when computer intelligence, we've reached artificial general intelligence, and it's equivalent or nearly equivalent to human intelligence, and what that means for society, whether that's 50 years away or 200 years away. But it's a fascinating book. Let me just read to you what I wrote, because this is how he starts out the book. He begins the book with a sci-fi tale intended to get you thinking. A group of computer scientists called the Omega Team decide to build a super AI machine that can learn everything humans do. I just did a podcast on the first large-scale AI fail, which was basically Facebook. So what the Omega Team does is they create the supercomputer called Prometheus, and they use Amazon's Mechanical Turk, or MTurk, to have it perform money-making tasks, or human intelligence tasks. And within a week, the thing's earning $1 million per day. So then they teach Prometheus how to make TV shows, how to make movies, how to make commercials, how to make news, and eventually how to make politicians. And this is how Prometheus takes over the world, because it learns so fast. It can obviously read thousands of books a day, watch films, TV shows, commercials, and then learn how to reproduce them, learn how to create social influence, and take over the world. So Tegmark, he tells this story, which can be a little bit depressing, to make the point that this is one path for AI, But overall, I mean, it's unprecedented technology, and it's going to be unpredictable. And he wants us to choose our path now, so to speak. That's a 300-page book. If you want the 15-minute version, find his TED Talk, which he just did a TED Talk for the book. It was just put online on YouTube a couple of weeks ago. So just search for Tegmark, Tegmark. Look for his TED Talk, and it's going to be a condensed version of the book. He's got an incredible graphic in there you have to see, which explains. I'll just give you a rough of it. I should have took a snapshot of it, but watch his TED Talk. He shows a geography of a coastal scene and mountains, and artificial intelligence is the sea level. And so as it rises, what can it take out? The mountains would represent uniquely human tasks like making movies, writing a novel, that require extreme human intelligence, surgery, that kind of thing, although robots can do surgery. And then the sea level, the coast, is all the human tasks that could be replaced by artificial intelligence in the next few decades. Translation, simple, anything simply quantitative that doesn't require human intelligence. So fascinating TED Talk, and I want you to watch it because this is a part of a discussion we all need to have, whether we're investors in the technology or not. All right, let's get back to China. I don't know if you noticed, in January, China announced that they were creating a over $2 billion artificial intelligence district around Beijing. And Shanghai kind of already has an AI park too. But the whole idea is, China knows that this is the technology of the future, and they do not plan to be left behind by Silicon Valley. So that's why the government is investing. And let's fast forward to Baidu. Baidu is deeply involved in advanced technologies. They have a big data lab, they have a Silicon Valley lab, they have an Institute of Deep Learning, and they are intensely interested in all things artificial intelligence. And they even do stuff with biotech, bioinformatics. All right, this is a graphic I love to show that gives a super big picture on what governments and cities are thinking about. This comes from Frost & Sullivan. They're a UK research group. They've been around for a while too, but they're really focused on advanced technologies like AI. So they say smart cities to create huge business opportunities with a market value of $1.5 trillion in 2020. And that's everything from buildings, healthcare, transportation, education, security, and energy. And it's easy to see when you think about it, making a smart connected city, using IoT sensors and then cloud-based AI algorithms. The potential is unlimited for how we can make government and corporations more efficient. And that's part of the cost savings too. When IBM said, a couple years ago that the cognitive revolution represented a $2 trillion market going into the 2020s, part of that was based on cost savings and becoming more efficient. All right, so that's my rough wrap on things. But just yesterday, Samsung announced that they're going to deploy plans for new spending of $22 billion over the next 3 years. And their key areas are, you guessed it, AI, of course 5G, anything to do with autonomous cars, and then also biotechnology and bioinformatics. So these areas are growing so fast and creating new industries. That's what I always say about NVIDIA. NVIDIA actually ends up creating new industries because of their technology. So, the one thing I want to address about China is that I just got an email this morning about how we need to watch China. We need to, they've got a new super rocket. They're gonna militarize this. They're gonna go into space. They're our competitor, and that might be true. But I say the way you win is by investing in China. And if you ask a millennial or somebody who's 30, around that age, what they think, I don't think they see themselves as in competition with China. I listened to a couple of A16Z podcasts the other day. A16Z is Andreessen Horowitz, the venture capitalists who do a lot of stuff with crypto, in addition to AI and getting into biotechnology. You listen to these guys like Ben Horowitz, and I'm trying to think of one of the other general partners, but when they talk, when they look at the crypto area on blockchain and its decentralization, their take is, hey, young people who do coding and programming or want to be involved, they're passionate about, say, the blockchain space or crypto, they think much more globally. So they would see any opportunities in China as purely that, as opportunities and not threats, because of this technology being so global. So it's all a matter of your perspective, and whether we see China as an enemy and a threat, or as corporations working together. And there are many partnerships. Alibaba obviously competes with U.S. companies, so does Baidu, but there's many cross partnerships too. So bottom line is, don't rush out and buy Alibaba or Baidu today, but definitely look to pick a spot to own them long term, and definitely be an investor in the future by learning more about these advanced technologies. All right, thanks for joining me in the kitchen.